Forex. Forex. That spells Forex. Chain doing Forex, guys. You gotta hit the iron when it's hot. This time New Zealand versus the Canadian dollar. Applying my chart trading framework on the monthly trend, on the monthly candle chart. And applying Stan Weinstein stage analysis on the weekly. Trying to get some harmony in between those two time frames. And see if we get a possible play here, guys. So New Zealand, the Kiwi versus the Loonie on the monthly looks like a top. Wow, look at that, man. It's beautiful. The precision of resistance, monthly defined resistance, opens and closes as I draw them. All those wicks being noise above, false breakouts, anything here. See about here, you pretty much had your top. Look at that here. Oh, during the month, man, was the price action all the way up here, only to say revert, going back in, guys. That's monthly defined, important. It's what I called also, I just had a few posts on badcharts.com. It's what I call the hidden resistance. It's that higher time frames defined resistance. And when you go in on the smaller time frame, let's just go in right now. The price action went through it. You don't see it, right? Because weekly defined resistance is somewhere else. It's defined, weekly defined resistance is defined with its opens and closes. And then the price action, you think you have a breakout here because you're above your resistance, you're above the weekly defined. And then the price action, oh, I have a crazy breakout, but what you forgot to check was the monthly defined resistance. Is there invisible resistance here? And it is right here at this level. So even if you have a break above, the monthly might suck for some crazy reasons. They suck that price to close below the monthly defined range. And that is what I call a false breakout. It's a whipsaw and it's a trap. Because you're in, and after that, when you get back in here, either if you don't recognize that it was monthly resistance in the process, hidden resistance, then you're pretty much going to reach your sell stop. If you're lucky, you have one, and you lose 1% of your NAV max. If you don't, then you could be trapped forever. Look at that. Since then, man, never came back up, and you just be dead money. So that is hidden resistance right there at its best. Okay, let's go back on the monthly. I digress. So that looks like pretty much like a top. That top pattern here, breakdown, reaches implied measure move. There's another close right here. It seems to be another top. Another top. Another. Let's see here. Where's my arrow? What's implied measure move? Top to bottom. Ooh. All the way down here, guys. So you see, that's the implied measure move for that top pattern. If the monthly close stays above, you see, you had all these closes below that monthly defined resistance support. So you need that candle has to close above 88.88. If it doesn't close above 0.88, then this is not valid yet. And this target, if ever would have a close below 0.88, I would actually cheat in my favor, shorten it just a little bit, just for me to be just above those closes and that open right here. It reduces my reward, lowers my risk to reward, but increases my probabilities of hitting my target instead of taking a chance that I have to go through this weekly and daily noise sinking through that monthly defined support right here. Just a little technique to increase your probabilities of reaching that possible target. So it looks like we're going down some more, guys, if we close below here. So that's the higher trend, how I confirm with any framework, confirm the trend above the one you're trading, confirm that the direction, and then go on your frame, your time frame that you want to trade, unless it's a weekly, because we want to play stand. What do we have here? Remember the Mansfield relative strength? I'm comparing it to the DXY, the US dollar index, the basket of Euro, Canadian, Japan, Great British, and a few others. So that's right now what I'm aiming to compare it. Stocks, I compare them baseline SPX 500, and currencies, I'm comparing, see how am I performing that basket of currencies. Below the Ichimoku cloud. Oh, something here. Below a horizontal breakout line, you have one here or here. Let's even close this right here, get a bigger screen. Boo! So you have it right here, right? I love this indicator. Mansfield relative strength. If it's red, the 30-week moving average angling downwards. You're below the 30-week moving average, the price, and you're underperforming the DXY. So that's for Stan. That's a check mark right there. Second check mark. Well, we're below a horizontal breakdown line. 30-week moving average going downwards. Below the cloud, below any, there's no support under, there's no green cloud under us. We're going down through that. We have the higher trend that we're going to confirm at the end of the month. And guys, man, the volume. Okay, back to the volume. And I'm still digging at, and I see that FXCM. I've noticed that, let's do the exercise. New Zealand CAD. Let's say choose Oanda. Bring that up here. And notice like the volume, how they change. This is FXCM, Oanda. FXCM, Oanda. So I'm trying to figure out, see this one, the last candle is 100, last volume candle 163,000, and FXCM has 316,000. So I'm not quite sure what to make of it. I really have to make sure that the volume is really volume that's going to be useful, really give us the sentiment, because remember there's a price action, and the volume for Stan was critical because it gave you the pressure, the underlying pressure. Price can move up and down on low or high volume, but if it's on high volume, it reinforces the direction. You kind of see it here, right? Look at the angle going upwards. And that's what I've been reading up on for FX and the volume, is you want increasing volume in your direction and decreasing when it's pulling back. If it's increasing on the pullback, the volume, then that's a situation where you can't trust anymore, maybe a change of direction. So every time you thrust up, you want the volume to keep going up. And when it's going down, you want decreasing volume. There might be more to that. There might be, I have to observe and read more. There's not a lot of information out there on people applying Stan Weinstein stage analysis to Forex. If any of you out there have any experience, let me know. But I'm reading up on other frameworks that talk about the importance of volume in Forex and how to use it. And there's some similitudes. That volume is important to tell you the direction, the strength of the direction. You don't want divergence of the price action and the volume in your direction. So right now, what we'd like to see, right? We'd like to see volume picking up right here. Right here. You see the price action going down, how the volume goes up. What we'd like to see right now is volume actually picking up, and it's been going down from here. You actually want it, we want it to go upwards here on red candles, and that'd be probably the last final confirmation. So what we could do now, we have a couple of weeks for the end of August, We want that monthly close, right? Because remember those wicks, when you get greedy, Pat, come on, it's ready. It's below the Ichimoku cloud. Let's do it. You go back on the monthly. And remember all those wicks above. Well, I'm on the Oanda. Remember all those wicks above here? Well, those are the traps, guys. Same thing here. This red candle could easily be just a wick at the end of the day, guys. Let's go back. Forex, Stan Weinstein. See that? False breakdowns. You think you're going down forever, but get the price action. 1, 2, 3 goes back up. 1, 2, 3 goes back up. To never close a month below that line. Super duper important. So this could happen the same thing. So gotta wait. And we gotta wait for that volume. We want it going up in your direction. If it's going down, you want it going up. And that's the final piece, man. Or else we're set here. We're below the Ichimoku cloud. It's looking pretty good, guys. And who knows what's going to happen. Then the 30-week average going downwards. Maybe going down, back up here, and then down. That's how usually it is, right? And that's why I say, like, it's human emotions and charts. You see it's not robots. If it'd be robots, then, I don't know, country X would raise its interest rate. And the price action would just be more linear. And every time there's an event that has really to do, it'd be really in straight line until the next event, right? But now you see all this emotions, people buying at different time of day, analyzing different types of information at different moments. I don't know. I can't even list everything, the fear, the greed, the anticipation, all that. It makes that, it's represented through that. It's like painting a canvas of human emotions on a chart, applied through the action of buying and selling an instrument. It's really a lot of food for thought there, guys. Okay, New Zealand, looking good. We're going to keep an eye on it. Maybe come in a few weeks. And by then, maybe have some confirmation on the volume. Having some volume picking up on the way down. Make sense? All right, guys. See ya. Ciao.